Hello, and welcome to this video podcast with myself and David, where today we're going to be looking at the US dollar and gold. But as usual, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen? Now, you all know trading can be a very, very risky business. So please, please don't ever think of using money that you cannot afford to lose. And just take that out of the way. Now, these video podcasts are actually going to be very short. And we're just going to focus on, as I said, on this particular one, the dollar and gold. And the platforms we'll be using are the MT5, which you can see here on your screen. And David will be looking at gold on Ninja Trader. And the reason, there's a couple of reasons why we've chosen these two charts, these two instruments is, first of all, we've got the ECB tomorrow. Obviously, that always has a lot of volatility, and that can cause the dollar to do all sorts of things, as well as the euro. But more importantly, we also have NFP on Friday, and in the background, we've got the ongoing issue with the trade talks between China and the US, which at the moment don't seem to be going anywhere. We have lots of rumors. Indices are trying to climb higher, but really the kind of market mood at the moment, it could best be described as kind of fragile, as it were. Okay, so let's just start here with the dollar index. And as you can see here, I've actually got the daily chart, which I'm just going to expand. And we can see here the dollar index has had actually a really pretty good run up here. We had some stopping volume on this candle here. You can see from the wick of that candle, we had the buying coming in. Then we had a sort of, it's like a hammer candle, though it wasn't quite at the bottom of that little downtrend, but again, a lot of buying. And what it's done in the run up for the dollar, it's certainly taken it over the VPOC at 96.61. Yesterday was another update for the dollar, but if you notice the wicks on yesterday's candle, we've got wicks to the top, and we've got wicks also to the top of Monday's candle. So it has been going higher, but it is kind of struggling. And that's also the reason why it's also struggling is because it is moving through the volume point of control. You have a density of volume in this price region. Now, today's candle that we can see here, it could be a doji candle, it could end up as a doji candle. Not sure how much volume is going to come underneath it. But the kind of candle that we're seeing developing at the moment is certainly one that is going to suggest indecision, as it were. And that indecision is, if you like, reflecting, as I said, the issues that we have in the market and the two very important items of fundamental news that we have for the ECB and NFP. And if we look over to the left of this chart, we can see the congestion, the density of price action that the index is going to have to try and get through if it can certainly recapture this high, the 97.43 high. And of course, later on this month, we've also got the Fed. But what's interesting with the dollar is whatever the dollar is doing is obviously going to have a huge impact on commodities, which is why we're going to have a look at the gold chart, which, as I said, David has got over on the Ninja Trader platform. Very, very quickly, we'll just to have a look also at what the dollar is doing on our CSI, this currency strength indicator from our company, quantumtrading.com. And we can see here, this is certainly the red line, which is the dollar, reflecting this strong move higher. But if we go down to, say, something like the 2-hour chart, we can see here, let me have a look. Yeah, we can see the kind of, it's sort of kind of overbought at the moment. And, from this position on the CSI, you would expect certainly a pullback, a correction. Whether we get it based on the candle that we can see here at the moment, we will simply have to wait and see. Now, what I've also got for the Dixie is, because these levels are very broad levels, is a chart with the Camarilla indicator that we have from Quantum Trading, and what the indicator is telling us on the daily chart, and it's also, if you like, confirming this indecision, if you like, is you can see here the price is at the S4. This is the R4. I beg your pardon. The fourth level on this indicator and the Camarilla protocol generally is a key level, because the rules, if you like, for using Camarilla is that once price goes through this level, closes above this level, it can be considered, if you like, a valid breakout. It hasn't closed yesterday, as you can see. It went through and then pulled back. It's sitting on the R4, so that also explains, if you like, the lack of firm direction for the dollar index at the moment from a technical perspective. Now, if it does go through, pulls through the R4, where's it going to go next? Well, the next level here we have already, which is 97.01, and then the R6, because we've actually got 6 levels on this indicator, is the 97.12, and this, as I said, these are the highs for the index. If it doesn't go through and retreats, pulls back, because we don't know what's going to happen with ECB, we don't know what's going to happen with NFP, where's it going to go? We've got this fairly strong platform of support on the R3, which is 96.56. So once you know what's happening with the US dollar, you can then choose one of a pair on the CSI that you would like to trade with it. I mean, you've got a nice sort of overextension both on the dollar, and you've got the Aussie dollar down here. So that may be one to consider, certainly a buy of the Aussie, and certainly a sell on the US dollar, if in fact that does reverse lower. So that's really all I wanted to say about the dollar index. David, is there anything you want to add to that, what I said? No, David is shaking his head. As I said, promise to make these very, very short. So I'm just going to move over to see how what we've seen in terms of price action for the US dollar, how that's been reflected in really on the gold chart.
Thanks, darling. And very quickly, as Anna said, we're going to keep these very short. So this is the daily chart for gold. And what we've seen in terms of that strength in the US dollar has really been reflected in this volume profile here, and obviously in the price action. This is classic volume price analysis. We've got a falling market here, falling quite sharply, certainly over the last few days. And at the same time, we've got rising volume, which is really reinforcing the bearish sentiment towards gold over that particular period. Now, what's interesting, over the last 3 days, we've now approached the volume point of control on the daily chart for gold here, around about the $12.90 per ounce region, with this yellow dashed line, where we've got the heaviest concentration of volume. But what's interesting in terms of the volume profile itself and the price action is we now have a situation where we've got a market that's weak, is falling, but the volume itself is also falling in line. In other words, the selling pressure is starting to diminish. And really that just reinforces the probability, the prospect of a pause, certainly a pause in terms of the US dollar itself, and maybe even a reversal. So basically what we're seeing here is the inverse of what is going on in the dollar, because when the dollar rises, commodities falls, and vice versa. And what we've also got on this particular chart, which is another nice example, is we've got a 3-bar reversal here with a spinning top candle to the top. So that was quite a strong signal of reversal. We had some congestion following it, but then we dived down into the price waterfall. Now we're starting to bottom out. We're starting to see some narrowish price action. And it'll be interesting to see how this volume completes at the end of the session, and whether indeed it does remain lower than the previous day, or maybe up at a similar sort of level. Nonetheless, we are seeing a general decline in selling pressure, and that's reflected in what is going on in terms of the dollar, as Anna mentioned. Just one final point just to highlight in terms of the trend monitor here. We have this very strong blue through the trend. Had some transitional changes in color here, but basically the trend extended right the way through from the back end of 2018 into 2019 here, held us in through here, right up to the top. Now we're starting to see the change. This may be only a temporary change, but nevertheless, we've had some nice price action to the downside. I'm going to pass back to Anna at that point.
As I said at the beginning, we really want to keep these very short, introduce sort of little VPA lessons, look at some of the indicators, look at the charts, look at some levels, try to get a feel for what is happening and on the charts, but also place everything into the context of the fundamental news and these days more and more what is happening certainly on the political front as well. So I hope you've enjoyed it. Before we wrap up, can I just point you in the direction of the website where you can find details of the indicators that we've mentioned in the short video. It's here, quantumtrading.com. As you can see, they're available for MetaTrader, NinjaTrader, and TradingView, which is great. They're not all available on TradingView. We are also working on TradeStation and probably going to do multi-charts as well. So there's lots coming along for quantum trading. I know we have a lot of our quantum trading users who watch these little videos, and which is always very nice. And as I said, we always try and present something new. We will be doing more and more of these. We're also going to be sort of doing follow-up ones. So we've looked at the dollar and gold today. Maybe revisit it in a few days' time just to see how those levels played out. How did the VPA lessons play out as well? And obviously we'll be adding our thoughts and views on other pairs, commodities, and we'll probably look at some of the indices as well. So hope you've enjoyed what we've done. David is waving goodbye, and we will catch you next time. Bye.